Welcome, future mortgage rock stars. Take a deep breath. I know studying for the safe MLO exam can feel like preparing to climb Mount Everest in flip-flops, but you are in the right place. Today, we are starting your official hero's journey to becoming a licensed mortgage loan originator. Think of this exam not as a monster to slay, but as a map to master. Over this course, we aren't just memorizing dry rules. We are transforming you into the ultimate guide for future homebuyers. Grab your coffee, grab your highlighters, and let's turn those licensing dreams into a reality. Next slide, please.
All right, let's look at slide 2. What is an MLO really? On the SAFE exam, they want to make sure you understand your dual identity. First, you are a financial detective and advisor. You aren't just pushing paper. You are digging into credit reports, tax returns, and bank statements to assess a borrower's creditworthiness. You are also the one guiding them through the absolute maze of loan products and making sure those highly regulated disclosures are delivered accurately and strictly on time. Second, you are the central communication hub. If the mortgage process is a theatrical play, you are the director. You are the bridge connecting the borrower to the financial institution. You'll be constantly coordinating between underwriters, real estate agents, and title companies to keep the train on the tracks. Exam tip alert, write this down. The exam heavily tests your ability to maintain transparency and integrity throughout this entire life cycle. You are the guardian of the transaction. Now let's get into slide 3, the meat and potatoes of what you will actually be graded on. These are your core responsibilities, and the exam writers love testing these details. First up, client consultation. You've got to conduct thorough interviews. You aren't just asking how much money do you make, you're discovering their financial objectives to pair them with the right loan. Second, application mastery. Memorize this number, Form 1003. That is the Uniform Residential Loan Application. You need to know it inside and out, because assisting borrowers in completing this accurately is your bread and butter. Third, eligibility assessment. You need to know the difference between pre-qualification, which is a quick, basic review, and a formal pre-approval, which involves actual verification of their financial backbone. Fourth, disclosure timelines. If there is one thing that will show up on your exam multiple times, it is TRID timelines. Specifically, you must manage and deliver the loan estimate within 3 business days of receiving a completed application. If you remember nothing else from today, remember application in? You have 3 business days to get that LE out. Let's keep this momentum going as we head into the loan labyrinth next. Welcome to slide 4. Think of this as the matchmaker portion of your job. And yes, the exam will test your ability to pair the right borrower with the right loan quest. Let's break down the 4 main categories. Conventional loans. This is your standard, run-of-the-mill mortgage. It's for borrowers with strong credit and stable income. Exam key. These are not government insured. Because of that, they typically require a higher down payment, usually between 5% and 20%. FHA loans. This is the ultimate path for first-time homebuyers. These loans are insured by the Federal Housing Administration. Because Uncle Sam is backing them, lenders can accept lower credit scores and a down payment as low as 3.5%. Memory trick. Think FHA first-time homebuyers friendly. VA loans. This is an exclusive reward reserved for our veterans and active service members. These are guaranteed by the Department of Veterans Affairs. The 2 massive exam-friendly perks here: 0% down payment and no private mortgage insurance. It's an incredible benefit for those who served. USDA loans. This is the rural treasure. It is designed for low to moderate income buyers looking to buy in designated rural areas. Just like VA loans, USDA loans offer 100% financing. That means 0% down. On the exam, if a question describes a borrower with a lower credit score and limited savings, think FHA. If they're buying a farmhouse in rural Iowa with no money down, look for USDA. If there is a golden rule in mortgage lending, it is this: if it wasn't documented, it didn't happen. Underwriters do not take your word for it, and neither will the exam writers. To build your meticulous documentation trail, you must verify income and assets using tangible proof: W-2s, pay stubs, and tax returns. You are also responsible for keeping flawless records of all the data on that Form 1003 and the borrower's credit reports. Most importantly, You have to ensure complete compliance with TRID guidelines for all loan disclosures. But paperwork is only half the battle. You also have to be a master communicator. You must translate complex financial jargon into plain, everyday language. High-yield exam tip. Make sure you can explain the critical difference between the interest rate, the cost to borrow the principal, and the APR, annual percentage rate, the total cost of the loan, including fees and interest. Under TILA, this is a massive deal. Keep communication transparent, manage expectations, and you'll stay out of regulatory trouble. All right, here is your roadmap. Memorize these 6 steps in order because the exam loves to ask what comes next. Application. This is where you collect the 6 essential data points. Exam alert. Once you have these 6 points, the clock starts ticking. You have exactly 3 business days to deliver the loan estimate. Processing this is the gathering phase. The processor verifies all the documentation, orders the home appraisal, and runs the title reports to make sure the property is legally clear to sell. Underwriting. This is where the loan meets the gatekeeper. The underwriter evaluates the 4 C's: credit scores, capacity, ability to pay, collateral, the home's value, and capital, cash reserves, to issue the final approval. Closing disclosure. Once approved, the final CD must be provided to the borrower at least 3 business days before they can sign the papers. If you remember 3 days for the LE and 3 days for the CD, you've just bagged a handful of easy exam points. Closing and funding. The finish line. Signatures are executed, funds are dispersed, and the property title is officially transferred. Post-closing. The loan is packaged and prepared for servicing or sold on the secondary mortgage market. Being an MLO is a balancing act between your inner salesperson and your inner lawyer. On the left, we have sales acumen. This is how you build rapport, solve problems for your clients, present the best loan solutions, and manage expectations. It's what makes you successful in business. On the right, we have regulatory compliance. This is what keeps you out of orange jumpsuits and prevents hefty fines. You must strictly adhere to federal lending laws. You must memorize these acronyms. RESPA Real Estate Settlement Procedures Act, TILA Truth in Lending Act, ECOA, Equal Credit Opportunity Act, SAFE Act, HMDA Home Mortgage Disclosure Act. The exam will test you heavily on what you cannot do. Steering pushing a buyer into a worse loan for a higher commission, taking kickbacks, and committing fraud are absolute hard no-nos under NMLS ethics standards. We are wrapping up with slide 8, and this is your strategic game plan. Do not study blindly. Focus your energy where the points are. Federal laws, 24%, and origination activities, 27%. Together, these make up over half your exam. Spend the bulk of your time mastering RESPA, TILA, ECOA, the 10003 form, and TRID timelines. Practice those debt-to-income DTI calculations until you can do them in your sleep. Mortgage knowledge, 20%. Make sure you can easily spot the differences between FHA, BA, and USDA guidelines. Ethics and fraud, 18%. When answering ethics questions, always adopt a consumer-first and law-first mindset. If an exam scenario seems shady, it probably is. Learn to spot predatory lending and mortgage fraud red flags. Uniform state test, 11%. Know your NMLS licensing, pre-education, and continuing education requirements. Remember, this exam is a 190-minute test of stamina. Practice with mock exams, memorize your key disclosure timelines, and treat your license as the privilege it is. You've got this. Let's get studying.
And that is a wrap on our introduction to exam mastery. We've officially kicked off your hero's journey by mapping out your critical role as a financial detective, breaking down the 6-step origination process, and dissecting the exact strategic weighting of the SAFE exam so you can study smart, not hard. Remember, success on this test is all about staying consistent, focusing on those high-yield federal laws and disclosure timelines, and keeping a consumer-first mindset. Take a quick, well-deserved break to let all of this marinate, and I will see you next lecture